Hey, it's Andreas. I've been investing for over 10 years, and in this video we will cover DexCom earnings, why they dropped by more than 40% after this earnings report. Now, if you appreciate this video, please smash the like button. It took about an hour to listen to the whole conference call, and then some half an hour more just look at the numbers in this case and read up on some terms. So if you appreciate this summary, it would mean a lot to see you smash the like button on this one. Moving into the earnings straight away, we can see that some of the highlights here, nothing wrong with those. We're seeing strategic highlights here, for example, that they're going to make a feature to get the glucose monitoring on the Apple Watch, for example. And we're seeing a financial highlight with some expansion in the margins from the operations side, and we're seeing decent growth in line with previous expectations in the past. Of analysts talked about 17.5% sort of average, and then we're seeing 16% here organic revenue growth. Although it's important to note that all of these numbers are non-GAAP, so not generally accounting accepted principles. It means that they're doing some adjustments, and they were very clear with this in the earnings call. Quite the negative tone as well in the call, and from what came in the call, it was quite clear why. We're seeing the quarterly performance here, indeed some slowdown in total revenue. They are the market leader in glucose monitoring. However, competitors are growing quicker and gaining market share, something they also commented on in the earnings call, how they were losing market share, and this is a result of them not keeping up in the DME channel. So that's more of the durable medical devices. So for example, a wheelchair is part of that DME channel, and they're not keeping up in this one. And as somebody who knows in sales, who works in sales, I know it can take a lot of time to ramp channel. Channel is a very difficult area in sales. You have to do contracts, you have to build relationships. It's a very time consuming process, and I don't think that the medical sector will be any different in this case if the knowledge carries over from IT to the medical sector. They also spoke about ramping the sales force in the United States, and that this caused disruptions somehow. Sales forces have been ramped a lot in the past, and it has not caused this level of disruption. But the big surprise, this in my opinion is why we saw such a huge drop in share price. Just last time they reiterated guidance. They were like, oh, we're on board with the full year guidance, nothing changing here. We're seeing 4.2 to 4.35 billion here on the investor day in June or July or whatever it was. They reiterated this, and then now for this quarter, just a big slap in the face for analysts. Just, we're not talking a couple of millions here or there being wrong. We're talking 200 million here on the bottom half, and then 300 million reduction here in the top half. These are big numbers, and it also indicates, in my opinion, that management does not have a pulse on the business. They did not see rebates coming in the pharmacy industry. They did not see the shift from the pharmacy channel to the DME channel. They're even commenting on it here. DME distributors, including pharmacy. Yeah. They really need to maximize that channel partnership. This was a difficult earnings call to get through. And then we're also seeing gross profit margins being adjusted down, sparking fears that it will be commoditized. There was a question regarding the commoditization of their product in the presentation, and I did not think that they gave a good answer to that. So that was the big slap in the face for investors. This is why stock is down more than 40%. Where's the bottom of this? When will this rebate thing be over? When's the worst of it over? Will we just see this big write down, or are they off on more? There's a lot of fear, uncertainty and doubt in the market, and will they be able to build this channel? Because they're losing market share, so competitors is obviously in there. They have that relationship. It's not going to be easy to exchange, and management did not give enough coloring regarding this, talking around, you know, this loss of market share, this big write down in projected revenue, and it was just very unsatisfying to listen to. And I'm not even invested in this stock, and you can hear on my voice that I'm, you know, a bit scared regarding the future of this company. So very big impact on investors, a lot of fear. It could constitute a buying opportunity indeed. The company themselves, they approved a share purchase program. Maybe that's a slight vote of confidence, too early to tell yet, but once again, they're just way too off on guidance. Huge surprise. And then that's it, just some more numbers below in the appendix. Those were the main slides. There was a lot of focus on this. There was a lot of focus on channel, the disruption that the ramping up of Salesforce has had, and yeah, not a good earnings call. The tone in the earnings call as well was a very negative one. They sounded very insecure, and it was unlike most earnings calls that I've heard in the past. So not a very good sentiment for this stock. That's been it, covering this huge drop in share price for DexCom. Perhaps a buying opportunity, perhaps a falling knife, only the future will tell. As always, hope you guys make a ton of money, whatever investments you decide to make. Take care now, bye bye.